In today's news, the value and wealth creation that will come from the blockchain revolution will dwarf the internet. This is a massive deal and the reoccurring message that is being inserted and published in institutional research papers, that we are now in the midst of a once-in-a-lifetime opportunity, a once-in-a-lifetime shift where crypto and blockchain will be inserted into the monetary system, becoming its backbone. This is why we now have institutions like Ripple Partner Standard Chartered stating that Trump's impact on the crypto space could result in crypto's total market cap ballooning to $10 trillion by the end of the bull cycle by 2026. Now, we will further explain why in a moment, but just deep that message from Standard Chartered here, with Bitcoin currently at a $1.7 trillion market cap and taking up over 50% of the total market cap of crypto right now. The prediction from Standard Chartered could put Bitcoin on track to hit well above $250,000. Now, be that as it may, the truth of the matter is the adoption of blockchain by the institutions, and therefore the price of most, if not all, of these crypto projects is not going to slow down anytime soon. It's going to explode higher and higher, as further showcased in this article here from Lloyds Bank. The International Chambers of Commerce, or ICC, has a target of digitalizing 60 to 80% of all trade by the end of this bull cycle, once more again by the end of 2026. So over 50% of all trade will become digitized, and Ripple and XRP, they stand to gain a hell of a lot from this incoming liquidity shock that Wall Street are causing. And Wall Street, they are ready. Now, why do I say that, you ask? Well, we have it here from Smoke once more on 3 separate occasions now, where Ripple has been documented and described as a public and permissioned ledger, which is a very, very big deal, huge news, because in this document here, with the subtitle, as we can see, benefits of public blockchains, increased transparency and instant redemptions recognized by the markets, CEO of Securitize Carlos Domingo stated, and I quote, "I don't know anybody that uses a private blockchain if they had the option to use a public one." To which there's another passage right next to it from Grayscale, therefore from Wall Street, saying public blockchains can be considered general purpose technologies with many potential use cases. Documents highlighting the importance and market dominance, therefore, public blockchains will get, and documents highlighting Ripple as such as a public permissioned ledger. The connections to me are as clear as day. Wall Street want XRP, they know of XRP, they trust and believe in XRP and its inherent use case in the future monetary system and the current crypto space. And in regards to Wall Street and Grayscale and they're gearing up for this liquidity injection into crypto and XRP, take a quick listen to this interview with Zach Pandal, head of research at Grayscale, talk about the relaunching of their XRP trust and the new index ETF, filing Wall Street's therefore their desire to get access to XRP.
Yeah, so we've launched a ton of products this year, really driven by investor interest as well as our own internal analysis of what we think are the most compelling opportunities in the marketplace at the moment. And so these things have ranged a huge spectrum from Bitcoin scaling ideas to AI-related projects to some of the decentralized finance stalwarts. So it's a whole range of things. XRP is one example of that, and I'd say that one, really driven by investor interest. There are a lot of XRP enthusiasts out there, and we wanted to be able to offer that product. We previously offered an XRP product and withdrew it after some of the legal issues emerged. Now that we're we felt we were ready to offer that product again today, and the investor receptivity has been very good.
This is one of the many reasons why I am so bullish right now for this incoming liquidity injection into the crypto space from retail, but more importantly also from institutions. Why I believe most projects, if not all, especially XRP, are destined, guaranteed, dare I say, not financial advice, but guaranteed to explode in value over the next few months. This is why I created a free to join Discord server where 450 of us over that now are working towards achieving financial freedom, spreading our knowledge in order to make as much money as possible in this cycle to become rich. So if you want to click the link in the description below, because interestingly enough, Grayscale, they aren't the only ones who have filed for an XRP ETF. They're not even the only Wall Street institution to do so, because we also have the likes of Bitwise, who was actually the first to voice their opinion, their desire for an XRP ETF, and then we have the other Wall Street institutions who followed in suit. Yes, Grayscale, agreeably, they launched the XRP Trust first, but it wasn't until later they expressed their desire to make a new ETF index filing, which included XRP. Point being, though, in regards to Wall Street institutions, you now have Grayscale, of course, but you also have Canary Capital and then Cathie Wood's 21 shares. Evidently, Wall Street, they are gearing up faster for XRP, for crypto, and it won't be long, in my opinion, till the likes of BlackRock, they express a desire for an XRP ETF as well, as broken down in this video here from Riz XRP. Listen very closely.
And for XRP to get an ETF, because they seem to be the most enthusiastical when it comes to wanting something. You don't hear a lot about Cardano ETFs anymore. I think, last point, I think 2025 is going to be a very eye-opening year, if you will, simply for usually what happens is, for those of you who don't know, during a bull run, like, things get a little crazy, obviously, but a lot of things end up launching very, very quick. As long as there's big money to be made, big money in the background will make sure that it goes through. And that, I mean, we're nodding in the direction of BlackRock here. If Bitcoin goes to 200, 300,000, XRP's at 7, 8, 9, 10, 11, all these other things like that, and there's more money to be made on top of it, by launching ETFs, they're going to get launched if BlackRock wants them to be.
Now, what many are waiting for, of course myself included, but also mainly institutions, is the dismissal of Gary Gensler and the revamping of the SEC. Speaking of which, in accordance to Mario Norfol's post here, and adding some context to why Standard Chartered Ripple partner believe crypto may balloon to $10 trillion by the end of the bull cycle, the American Securities Association has called for SEC Chair Gary Gensler's immediate resignation following Trump's election. Of course, the statement comes off the back of Trump's pledging to replace Gary Gensler, but it isn't just Trump who wants to remove him, it's everyone by this point. It's just that those in power, those in Trump's party, in his cabinet, now have the power to do so. Speaking of which, we have this clip here from Vice President J.D. Vance talking about utility tokens getting banned by the SEC when they shouldn't have done. Therefore, you can be seen here, effectively J.D. Vance is supporting XRP, as XRP is a utility token. Once more, pay close attention.
So Gary Gensler is sort of the complete opposite of my view. And there are two problems that I have with Gary. One of which is that I think he wants to inject politics way too much into the actual business of securities in the United States of America. But in some ways, the more fundamental issue, or at least the most relevant issue for this particular conference is, the approach that Gary has taken to regulating blockchain and crypto seems to be almost the exact opposite of what it should be. And I'm oversimplifying a little bit, but the question the SEC seems to ask in regulating crypto is this a token with utility? And if it's a token with utility, then they seem to want to ban it. And if it's a token without utility, they don't seem to care. I almost think we should be the opposite here, right? I worry about financialization. I worry about, frankly, whether a lot of the crypto stuff is fundamentally fake. But if a token actually has utility, that's the sort of thing that, by all means, regulate it. By all means, be careful about, how consumers interact with it. But you don't want to just get rid of this stuff. And here's where I really, really worry about this is a lot of the newest challengers to social media, the social media incumbents of 2024, are going to require some blockchain technology to make their business work. Maybe they'll require a token that supports verification. There are all of these ways in which the companies, when I talk to sort of friends who are still in the VC industry, the companies that are most exciting to them, they're doing actual things in communications in the 21st century, in 2024, I should say, those companies very often rely on high utility tokens to do things like verification. Well, if we're not making it possible to do verification, then we're going to make it really hard to challenge the existing incumbents in the space. And
Now for me, the icing on the cake comes from this post here from Smoke, which highlights the capital market firms that are preparing to see an ROI, also known as return on investment, on their digital asset investments by the end of this year, 2024. 94%, almost all of them, of capital market firms will be generating profits from digital assets. Huge news. And with Bitcoin rallying to higher highs every single day, with the shackles of crypto and seemingly XRP now finally starting to come off being removed, the great wealth transfer is now almost, if not already, upon us. So by all means, please do your own research, or better still, come chill, chat and learn more in the free Discord server. Again, the link is below. I'm doing look short term, think long term, and I'll see you in the next one.